This is the Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, November 7th, 2016. Last week, commodity prices rose and the U.S. stock market fell for a ninth day in a row, the longest losing streak since 1980, 36 years ago, due to concerns about the U.S. election. But with new news yesterday, as we are filming this, markets are forecast to have sharp gains this morning. U.S. steel production fell slightly and is now near 10-month lows as imports remain a problem competing with U.S. steel mills. Related, yesterday the U.S. opened a new investigation into Chinese dumping steel into the U.S. by funneling it through Vietnam. Oil prices fell to the lowest price since September at $44 a barrel, down 10% for the week and 12% for the month. This is helping consumers but is a negative for jobs and commodities supporting the oil industry. The oil rig count continued its rise on higher oil prices versus 10 months ago. The oil rig count is now up 42% from January, but it's still down a huge 72% from 2 years ago. Iron ore ended Thursday at $65 a metric ton, up a big 5% for the week and up an even bigger 18% in the last month, which is causing finished goods and scrap steel price increases. Scrap steel prices are steady here, but in the past few days rose about $20 a gross ton, which is 75 cents per 100 pounds. Some grades and areas are actually up $30 a gross ton. Increases are due to help increase the flows of scrap metal coming into yards, which is needed due to export demand. Hot rolled coil steel is steady at $5.46 a metric ton in this graph, but we continue to hear of increases due to high raw material costs, driving the need for higher finished goods prices. Stainless steel 304 was steady at 31.5 cents a pound as demand remains fair and no major economic news. Copper rose 6 cents, ending at $2.25, mostly based on the U.S. dollar, the currency, which has been weakening. When the U.S. dollar falls, by definition, materials priced in dollars should rise, and it has been falling. The 5-year copper chart shows prices about where they were a year ago after falling about 11 months ago, along with most other commodities. Related, copper inventories are falling, so prices should remain stable. Stable prices remains good news for planning for most companies. Aluminum was flat, ending at 78 cents, yet remains up about 20% for the year, with the increase due to demand increases along with controlled supply. We recently saw a report that increased energy costs to make aluminum are another reason for the increases. My thanks to Scott for passing on that information. Aluminum inventories remain near about 7-year lows, leading to stable to higher prices until more production comes online to meet demand. The ISM Purchasing Manager Index for manufacturing rose to 51.9 from 51.5 in September. This was the highest level in 3 months and was led by a sharp rebound in employment and a growth in output at factories. Over 50 is expansion, so this is solid news for jobs. Non-farm payrolls were up a solid 161,000 in October, which is a good number, and unemployment fell to 4.9%. Importantly, due to low unemployment, companies are finding they have to pay more to hire many people, which has led to a 2.8% increase in wages in the past year, making that the largest increase in 7 years. This hurts individual companies, but is great for the economy. U.S. vehicle sales in October were a strong annualized rate of 18 million, meaning 2016 sales will be a great year for car sales and close to a record level. High sales support stable commodity prices of steel, copper, and increasingly aluminum as aluminum content continues to increase in vehicles. With that, we hope all have a safe and profitable week.